Is oil joining the commodity rally? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hey, Dale. Happy Friday.
Yes, sell silver, buy oil.
Right out of the gate.
Yes.
Is that your
So,
call? Sell
yeah,
silver, buy oil?
yeah. Because, oil, this is embryonic. I know we had a little bit of a setback as President Trump backed off any kind of military action. But, people have to realize that Iran could preempt anything that we're going to do. The crisis is unbelievable there. And actually, this would not be the first time that we have a president that has asked people to rebel and stand up to an adversary that we were going to support them and then not. I remember the Shiites when we were involved in, I believe, the first Gulf War. They were told to rise up, and Saddam gassed them. All right, we told the Ukrainians to stand up to Russia, and now they're being deserted. So, I think I really feel for those people, what they're going through. And I know there are market opportunities, but I think it's a real tragedy what's happening. And I hope it's just not politics, that maybe we can help them.
Yeah. I think this story is still being written, right? But
Yeah.
I just want to say, I feel like this is so indicative, how we started the show, of the moment we're in, because everyone's brain is operating the same way, Dale. It's like making decisions quickly. There's so much we have to filter through. In just this week, Taiwan Semi seemed to reignite
Yeah.
the chip sector. Kevin
Yeah.
Hassett may not be the next Fed chair. Crackdowns, as you mentioned, in Iran. Are we going to do something? Is the U.S. not? Have they backed off? Rocky negotiations over Greenland. A flurry
Yeah.
of Trump announcements, from energy to tech having to pay for energy, to drug prices, to credit cards. I mean, it's almost overwhelming for
Yeah.
everyone.
You end up being desensitized. Oh,
Yes.
that's just another thing.
Yes.
When
And
they all could
so,
be pretty major things.
yeah, exactly. And so I feel like when you're doing that, that's an interesting tell for us, because you're sifting through all of the things that are probably on your book, and it seems like that's where your mind is, moving out of silver into oil. So let's break that down a little bit. And hi, everyone joining us in the live chat on Substack and YouTube. It's great to see you all. You probably feel the same way we do, which is just trying to wrap your head around all of this. So do you feel, I saw a couple of comments on X about the price action in silver being disorderly,
Yeah.
things going crazy in options. Are you do you feel like silver's topped out here? What's behind that rotation for you?
What's behind everything that eventually I thought that the dollar, and here's a weekly of the Dixie, and I've been bullish dollar while everyone's, waiting for the collapse of the dollar. Pretty good week. We got back over this pivot line at 98.80 and followed through. Short term, it may be a little bit overbought, but it was always my contention that we were going to have at least equality of this wave that we had from 96 to up here at par from here, which the lows were, 97, 97.60. So, I've been talking 103 for a while.
Yep.
And I think that, it's all, looks like green lights on this. The only thing that would change it if we, I could go a little shorter term, because pivots are important in the market. Even if you have a long-term view, why fight it short term? I used to, but who needs the aggravation? So this is the line that showed up on the daily. So as long as we're holding this 98.80 level, you have to stay long. Your first warning sign that this dollar rally is aborting would be closes back under 98.80. And then maybe we're going to retest the low. Either way, I'm bullish a dollar, but I think it's already starting to leave a lot of people behind. And a lot of people are still trying to bottom pick things like euro And it is diverging. It is due for a rally. Is it going to take out 118? I don't know, because when I look at a macro view, this is how I could come up with 110 euro eventually, is that we peaked up here. It was just a two drive formation, and we just sell off that held support. And then this was the bottom of the dollar, equal to about 118 in the euro. And just like the dollar is about to head up, if we have a just normal correction and it's a fib extension of this decline, call it 1.618, we could decline back down to halfway back, which would just be a normal correction, down to 110, which I think is going to pressure all markets, including the metals and including equities, especially copper, something I want to address today. So, I think there's potential for 110 euro, and then maybe another advance like we had here. But just to shake out, like we've been talking about for a few weeks now, Maggie, the widely embraced debasement trade, debasement mentality that everyone has embraced. Not down here. There were people talking about the euro going under par down here. And we had the big rally and dollar weekend, and metals exploded, especially silver. So all we're doing is having a bear market rally in the dollar and a pullback in euro, maybe back to 110. Go ahead.
Ian saying, I was thinking a bear pennant on DXY, the daily chart. Do you see that?
No, I don't know what he means by, maybe he was thinking a bear flag. Yeah, so that we could go to 102 and this being 102 to 104, and I guess it could still be some type of bear flag. It's already a little bit too extended, so I would call it more like, in Elliott terms, just a three-wave correction, an A, a B, and a C. So that's the technical jargon I would go with that.
Go with.
Yeah.
So do you, it sounds like, so that's putting pressure on silver. Do you think this is a dip before silver resumes its climb, or is this now going to be choppy here?
I think that silver is going to revisit whether it topped this week or it has one more push, that we're headed back to $60 in silver. And everyone should probably plug in their 9-day. Look at what we held this week. And we also peaked at a 1.618 extension. I actually caught a trade from 92.03 and took $1.60 out of it. And then it came back this day. And I'm not going home with any shorts, because it could always just, gap one more time. But it looks vulnerable to me. And one way to show how overdone it is to look at the gold-silver ratio. I remember telling people on your show, when the gold-silver ratio was trading up at 110, that they could do a trade without even, taking any risk, that all they had to do was exchange their gold for silver, because I was looking for this ratio to actually go back, talk 40. Now, there's no way I thought it was going to get there this quickly. But, this is pretty overdone. I mean, we've gone from, 108, we've dropped 50%. So, I think that it's kind of a parabolic thing. It's really hard to call tops, and I didn't think it would turn into a parabolic decline, but we deal with what we have now. The gold-silver ratio could start to correct. We're starting to get some short-term divergences. So this was silver outperforming gold. And if we get a bounce, it'll be silver underperforming gold. And there's starting to be some signs that may be beginning to happen. Here's a 4 hour. We're starting to diverge here a bit. And we may be maybe one more thrust down, but I certainly would not be buying silver and selling gold right now with the ratio down here. So, I think that silver is going to pull back dramatically. Whether they could eke out one more high, let me just point out that if we do make a new high here and we blow, it will not confirm on the 4 hour. And that'll be the first time. This last high still confirmed. We didn't take out this high. And on the daily, if it does that as well. This will be the first divergence on the daily. In fact, we have a divergence on the daily in silver compared to this peak.
It's been something else to watch. Babar asking, and this is going to bring us back to your WTI. Dale, what do you think of oil after breaking out from its bearish structure and tap faster to 63.75 area where fair value gaps lie? Or would it be a bit more of a similar move as we've observed in DXY, meaning slow and exhausted price action?
You know what? I think that we're going to pull back. And as long as we hold 57, I'm a buyer of breaks. I took partials at 62. This is when I put out the recommendation, and then I bought it here and I pitched some here, and I'm going to scale in from here. I already took a buck from 59, but I'm trading it, and I'd love to see it pull back to 57. I'm a buyer all the way down. We'd have to have closes, say, under this low, 56, for me to change my picture. And I'm actually looking for this is my longer term objective is 78, which was the same high that we had when we took out the reactors in Iran. So I think it's embryonic, and I think you have to buy breaks. Buy breaks in oil and sell rallies in silver.
Yeah, and again, not consistent with what you've put on our radar. Definitely last week, but starting back a bit before that as well. These
And
are
you're
some
right.
of the contrarian trades you've been talking about when everyone's chasing either what's parabolic or trying to look for lows. You were sort of watching these markets as ignored.
Yeah, and I don't think the market's going to like 78 crude. In fact, Maggie, as what Mark Chandler said when I was talking to him once, almost every recession starts with an oil shock. And, now that everyone's on the affordability platform, including the current administration, $78 energy prices with what everything else is doing, that's been the one thing that's been tame. It might be the nail in the coffin for economic weakness. And if we get over 78, then something major is happening, like the Strait of Hormuz is blocked.
Right.
I think the threat of them doing something preemptively is going to generate this kind of rally. But what I've learned over the years is that markets will peak on the actual bombing. It'll climb the wall of worry almost like a stock where it's rallying very strongly, and you have an earnings report and it's bullish, a very good report, and they open it higher and then they sell into it.
Right. So to buy the rumor or buy the worry, sell the fact.
Yeah, and I've seen it before. I saw it in Gulf War I.
Yep.
We saw it in Ukraine. That was a top in oil at 120. We just saw it recently. So, just something to put down in your book, that if you're long energy into a kinetic event, that when the bombs start dropping and oil is gapping higher, ring the register with at least some of your position.
Yeah. I think this is where it's really important as well to separate new headlines and actual fact, because if oil starts to move higher, you will see a lot of headlines coming from Washington, probably from everyone, but most certainly the administration, because we have midterm elections coming up, about doing all these things to get oil down. But, the getting oil onto the market is not as easy as unless they've been refilling the strategic reserve and they release that. But everything else, if it relates to Venezuela, takes time. So you may hear sort of proposals, but when will they come into effect? That's going to be really important to separate out. And we are in an environment where we are riddled with political headlines. So super important. Just want to mention
and supply chains also.
yes, and supply chains.
I heard that some tankers, instead of using the Panama Canal, that they went around the other way. So you could have a problem with supply chains. I don't think this is going to be because of global economies beginning to hum. I think it's going to be a supply shock, one way or the other.
That's a really interesting point. And these things matter, right? Because they will dictate sort of what ultimately happens. But there's going to be a lot of headline risk, is maybe a good way to put it. So we've got a couple questions coming. We have one on gold. Just before that, I just want to share something that Sophisticated wrote. It's speaking to your point, Dale, about intervention, U.S. intervention. I hope it's okay if I share this, Sophisticated. My pops was at the Kurdish uprising of 91. Bush told Shiites and Kurds to rebel and promised air support. Then when they did, no air support came. Dad was part of the operation to provide comfort as SF intel. After the massacres and one of the largest mass exodus of the 20th century on the part of the Kurds, Brits and Americans established a no-fly zone. So yeah, some of you have in your families lived some of what we're talking about, and these are really perilous times I think we're in. So thank you for sharing that personal anecdote.
Speaking about intervention, last week I told people I was looking to sell a rally in U.S. dollar yen, which is pretty, tied into risk with the carry trade, and we did rally just above it. This is an important thing, because if I'm right about the dollar going up, and I think that there's still a chance for the yen to maybe retest this top again, maybe take it out. But I do believe Besant is not happy. Yields are still rising on JGBs. Our rates look like 10 years going to go to 440. This, I think, if we get back up here again, they didn't have to, they just jawboned it down. But if we get up there again, I think that the Treasury and the BOJ, maybe the Fed, will intervene. We're at intervention levels in the yen, so I look to resell it up there.
It's when we get to that point in the past, Dal, I don't know if you feel this way, but first of all, they don't usually just intervene once, but the market will test their will, right? They're not just going to back down. They now know where they're nervous, and they're going to keep going for that. So that could be another thing that added to all the other issues.
It's a pretty toxic brew if you have a dollar rally, even if it's temporary, and you have the yen strengthening at the same time, because those are the two most popular carry trades. And if those currencies are appreciating, it begins to, because people are short that currency and using the money to buy other assets, that trade becomes more expensive. It already is compared to where rates were in Japan. The only thing that saved it is that the yen continued to weaken. But if rates stay high in Japan and then the yen starts appreciating, and, I'm talking about a pretty important high if we get one here. You look at the weekly, this could be, the currency trade of the year is that, we put in a top here and we're back at major resistance and we trade back down to 140. And under 140, there's going to be a panic with the carry trade. So, this is something you have to monitor. This yen.
And we know what happens
for risk.
Yeah, when people start to panic or unwind carry trades, there's violent reactions across all markets.
Yeah, this is what happened. We had it happen here. So we had that August bear raid. So,
Yeah.
yeah.
And so what level are we watching? 140? Is that what you just said?
Well, that's a big trade already. I mean, to me, there's many steps it has to go through, but 140, if we're down there, the carry trade's already under pressure. The carry trade could be under pressure just getting back under, say, this 155 support level is pretty important. And that would take it down, to 150, 45. There's a gap down here. But the weekly is saying this could be a major top to trade all the way back down to 140. So yen crosses, if you're sophisticated, being short, they're like Aussie yen may have peaked. So anyway, just the yen is important, and I think there's going to be opportunities. And I remember just one thing. I know I'm jumping around a lot, but
Go ahead.
I know that you asked me about China, so I started watching China. And when I look at something like the FXI, which hasn't made a new high since October, which is the same thing as the Nasdaq, or I look at BABA, which looks like it's had its second failing rally. China doesn't look that good to me either. So I don't think when we get this 10 to 15% correction in the U.S., global markets are going to feel it, and I think China might even be the best short on the board right now.
Wow. FXI iShares China large cap ETF.
Yeah.
That's super interesting, Dale, because that had been a lot of people's. I mean, we keep hearing the narrative, rest of the world, right? And
Yeah.
international diversification. We should say there's a difference between a long-term view and a short-term trading view. But still, that may not have been anticipated. Questions about, let's look at TLT, and then we have a question about the 2-year. We got some people who love the 2-year suddenly. But TLT, this is another one. Again, last week, and I tweeted this out, Dale had been looking for 2 unloved trades that he was looking for a breakout in. What are you seeing for TLT? Because we did have some economic data. We had.
Well, look good Monday, but then Tuesday, it looked good Monday or Tuesday when we broke out. But then remember, I said, I'm finally going to try the long side of bonds, and we'll probably break out over 420 on the 10-year, and that's what's happened. The 2-year also looks like it's heading higher. So I'm not long bonds. I'm not short bonds either. Probably should be, but I want to see where TLT is when. Let's start with the 10-year. You see this formation. 420 was attacked forever, but call it 395 low. So that's 25. So that could get you 445. I know a lot of people talking 435, but 435 to 45 is where we're going. Where TLT will be on that should be, 86, something like that. So, that's part of trading that I could think something going home on Friday. And as you're always assessing, and I was, for weeks looking for this breakout in the 10-year over 420, and then it looked like it was going to roll over. So I went with it. But now it's the other story. We're going back up. Yields are heading up.
It's interesting. So
maybe that's what supports the dollar and gives people the excuse to sell stuff.
Yeah. For those of you who are subscribers of the Market House, if you're not, I hope you become one on Substack. I put out a reporter's notebook. I'm going to do them from time to time now because I travel around and talk to a lot of people, as does Dale. And we always like to sort of, try to pull threads through. But I had sat down with Mark Faber and talked to him, and he a lot of people think 2026 is going to be a year of like a tipping point. It's an inflection point, and he's watching interest rates, and he thinks they break out but they could break out down or they could break out up, the yields. And if they're up, it's because of inflation. So if we're starting to see that fail, then pay attention to inflation and not the CPI reports. That's not always the accurate, but the market getting concerned about price pressures.
The market might be okay while yields are going up. The big sign, negative sign for the dollar is going to be when for the market is going to be when yields peak.
Right, because then it's a economic weakness story. Right.
So this is disintermediation. It happened in 87 too, where the market kept going up while yields were going up. And then when the market snapped, then the bonds had a monster rally.
Right, which when you're looking at lower rates, watch what you wish for, as if they're moving lower because the economy's weak underneath. And there are many people, and we talked about that, many people who kind of are a little bit worried. And we've got a flip side of that too. We hear all sides. So, but we're at this point where it seems like we're trying to find out. So just to be clear, Dale, you were looking for a breakout and we're kind of getting bullish on TLT. Are you not anymore now based on this failure?
I'm not. Okay. I'm not bullish. I want to see where they're at. Maybe the low's going to come in from 86. We still have a long way to go from the bottom, and we could just pop to 435 and then start heading back under 4 again. Mm-hmm. And then I'll look at the bonds. But something that people say predicts the economy is Dr. Copper has a PhD in economics. And I've been tweeting about it, posting about this in the Discord room, and talking about it on my videos on TradeGateHub, that we have a third drive to a top in copper. And I'm thinking that we at least correct to back under, back to maybe $5, $5.20, maybe all the way down here, have 61.8. I'm looking for a pretty good correction in copper. And part of that will be, a lot of people bought this because they thought it was becoming a precious metal. Maybe with what I'm seeing in China, that global growth, which will also have a problem with high, if I'm right about energy prices, that's not going to speed up economic growth. That's going to make people pull in their horns, give them less discretionary capital, make the inflation numbers not look good. So this is, I think, the best short between, say, for example, shorting gold, which, look, it still had an up week. I didn't cover it, but I talked about the throwover line. I said, anyone, if you're going to short it, be careful, because we could get through this wedge line, which is what it did. And look how it respected this throwover line. Maggie, I've been doing this for decades, and I drew this line weeks ago, and it still amazes me how you get action from a line that really kind of just comes from your imagination and where you decide to intersect it. And now we're starting to close back underneath it. We could pop again in gold, but if we do, there's going to be glaring divergence, because I know a lot of people are going to sell their silver and buy gold, that maybe gold didn't complete and it could still have 4,700. But if it's not the ninth inning, it's the eighth for maybe one more high. But see how the weekly, I just want to have people get a feel for why copper is the preferred short. Look at this weekly. It's tremendous, right? Look at this weekly. I mean, it took out highs from years and years and years ago. And then look at copper. All it did was get back to the pre-tariff issues with copper. And it's diverging. Silver's not diverging. Look at this. The weekly momentum's unbelievable. So, it could break to 60 and then go to 130. Gold could pull back to 3,600 or lower and then trade 5,000. But these weekly readings compared to copper, I'm a believer in being short the weakness and long the strength. And among the metals, copper is the most bearish weekly pattern for me, and it closed lower on the week.
Uh,
So there you go.
There you go. Great insight. And I just want to remind everyone, we always talk, and Dale and I talk about this all the time. First of all, Dale's talking from a trading perspective, and you can have, even if we pull the lens back a little bit, cyclical movements or shorter term movements in a larger structural trend, right? And so that's really what Dale's tracking with that. So just keep that in mind, because some people are focused on the long-term trend, and you can have that opinion, but you want to just be careful if you're trading or invested, to know if you're seeing those price movements where they fit. Eric, excuse me, asking, can we get to 5,000 in gold? I think you just said it's possible, but you expect some pullback, right?
Yeah, I mean, maybe it goes there first. I'm just saying that it's late, that in both silver and gold, we could be completing a third wave. And people that know Elliott know that there's 5 in a structure, which means if we're completing 3, we should have a pullback 4 wave. That, maybe take silver back to 70 is going to be big. So, I figure, if we're topping here at 93 and we take out 70, that gives you about 57 or 60. So, we could do this and work our way down over the next couple months and wash out some of that enthusiasm, and then blast again because I am looking for over 100, just not on this wave, after a 4th wave pullback.
So if you are looking for an entry point, then you might have an opportunity.
Yeah.
One last one, Nat Gas.
Okay. It's like I said last week, it's a bottom pick. I think the structure in WTI is much stronger. But Nat Gas is starting, still hasn't done anything right. But I think people are right to be monitoring it and waiting for a signal, because we're starting to get some divergences on the 4-hour. See this? This is confirmed low, not compared to here, but within this little 3 drive. I think we're setting up a 3 drive to a bottom. Maybe we could trade 304 or $3 is big time psychological support, and then break out, because on the weekly, even if we get all the way down to, and no one thought we would get down here even a month ago.
Yeah.
I mean, this has been,
because there's a longer term bull story around that gas. The problem is it's just been, as Andre says, the widowmaker. It's called that for a reason.
Yeah, there's, there are a lot of women out there that might be able to make me dinner this weekend. I'm good company. I might even sing. I might even sing.
You might even sing for your dinner. The worst things, right? Doug has one more question. I said that was the last one. I'm going to squeeze this in for Doug. Dale, won't the liquidity injection and tax changes cap any downside risk to metals or the markets in general?
I still think there's going to be a melt up. Okay,
A melt up.
I don't think, but this doesn't look like melt up action to me. In fact, look at what the Nasdaq did it made people crazy this week. Look at this.
Look at Russell. Russell has drastically outperformed.
Oh yeah. That's where, that's the new leadership. But I just, a lot of people trade Nasdaq stocks. So, I mean, look at this. All right. It was trying to break out. When we were talking, this was last Friday. And we said, yeah, it's trying to break out. Still hasn't made a new high. Okay, so then we had a pullback, but it held. Then it tried to break out. Then it broke down. Then it tried to break out. Then it broke down. You tell me, audience, is this blow off action? To me, feels like distribution. I'm not saying we can't rally. I talked about 7,000, 7,200 in the S&Ps, but this is definitely some pretty choppy action here. So I don't know. And I look at things like, I look at things like NVIDIA. It doesn't look so good to me. I mean, look at where we are. There are a lot of things that are, could be heading back down to major support and eventually will break down. Could we rally, in bear market fashion? Sure. But I don't think we're going to make new highs in NVIDIA. Here's the MAGs. They look lousy. Okay. We're at, S&P at new highs, Russell. They look like they're on the verge of breakdown. Here's Broadcom. It's if we break 320, I mean, it could rally for another week or so, maybe even to 380, but back under 323 measures 220. So there's a lot of damage in the leaders. And here's Palantir.
Yeah, and you've been saying that, and we saw that enthusiasm come back into semis, but it kind of just dragged down.
The semis they're the strongest. Semis are the strongest. You had Micron being a hero, and then it was Taiwan Semiconductor, and here's the SMH. It's making new highs. Is before even the S&Ps. It's outperforming, but I still see it had a chance to blow out this divergence. It hasn't yet. My account shows I'm wrong. I've been wrong. I caught this, and then I started shorting this rally, and so I'm underwater. I actually did add going out to May and buying semi puts, but I've been wrong. But a lot of things I haven't been wrong on in the stock market, and that includes NVIDIA, includes Uber, it includes the MAGs.
Yeah, your general
thesis
has been right.
Ran over me. Semis ran over me.
That's exactly right. Your general thesis was right, but the semis taking off.
I was wrong about a sector. And you know what? I'm wrong a lot.
Well, you said it. So is every trader. Otherwise, you're not trading. If you're right all the time, then you're only pretending.
Yeah.
We have a couple of people who are joining us late. I'm going to say go back, but I'll answer your questions. Eric, Dale is, yes, he likes oil. He's looking for upside. FXI China, he does not. We talked about that. Go back and watch it, and we'll do a write-up. The Substack write-up will be out tomorrow, folks. He thinks that might be one of the most interesting shorts. So please comment on that, Eric, because I know you've been looking at China really closely. Eric has a fantastic Substack, Your Weekend Reading. Check it out. And he looks very international. He's been doing some really fun stuff with AI too. So it would be really good to get your thoughts if you have a different view, and we'll circle back next week and discuss. And I think that we covered all of that. A heads up, we are MLK weekend. So we are dark. It's a market holiday, a long weekend here. I'm working through it. I've got to do some moving for a family member, which is a drag, but must be done. But we will be dark.
Kind of a drag. Remember that one?
No, wait, sing more. Which one?
Kind of a drag to go out with you.
No, I don't. I'm usually good with these, Dale, and I don't know that one. Wait, is it from 2016? Because everyone's talking about we should have teed up a 2016 song since it's like all the rage, right? Everyone's posting nostalgically for 2016. That feels like it was yesterday for me. When I think nostalgia, I think like much further back than that. But I want to tell everyone we are going to release a special conversation with Miss Schneider, so you will have something taped on Monday. We had Miss on at the end of the year, and she does a very big 2026 outlook. Even though she's a trader, she kind of, that's where she talks about some of the macro themes and narratives she's watching. And then like everything else, she trades around them, like Dale says. But it's a huge thing, and we couldn't get to all of it in December. So I have a conversation with her about that. I will say she wrote it in December, and some of her calls in that already took off. So she's been doing really well with some of that, but she'll talk about it in a little bit more detail in that. So we'll have something for you, but we'll be back live next Wednesday. And we've got some good conversations coming at you on Substack. I talked to Rick Rule today. We'll try to release that sometime in the next week. I talked to D. Smith about geopolitics, just to get a framing so we can keep up with what's going on. We'll get that to you at some point as well. So some good stuff coming. But that's it from Dale and I. We're tired. We got to kick off for the weekend.
You do a great job. You're a watchman for your community, Maggie, by bringing in these people and giving them the awareness and asking the right questions.
Oh, thank you, Dale.
Yeah.
I'm not even paying him to say that.
No,
But
it's
you do
true.
the same thing. By the way, everyone's asking about Dale's Dale does have a voice and we love it. Asking about your Discord. The invite we put in times out after a while. I've got to get with Dale's Discord person and try to get like a permanent invite that we can post. But if you're trying to do an old link, we'll put a new one in for you. Dale, I think, has it pinned, or he's going to have it pinned on his X. We're working on that.
Yeah.
But if you go to if you search up TradeGateHub on
you could just go to the YouTube channel of TradeGateHub, and
right,
it has, I believe it has a link there.
Yeah, and there's a link there. But we'll work on getting one that stays fresh. But
Free.
he's posting on Discord for free. Because he is a bright light for the community as well. And we appreciate his residency. Dale, you've got to be watching football. I mean, it's playoff weekend. Last weekend did not disappoint. It was fantastic.
Boy,
can they top it? Who are you rooting for?
The Bears in Indiana.
The Bears, of course.
Yeah. I've had a few heart attacks with them this year.
Well,
it's always in the fourth quarter.
It's no fun if it's not that way. That's how a real fan is forged. If you're stay with them for that.
Yeah.
Well, it's going to be really cold, so it might help the Bears.
Yeah. Well, I think that they could beat the Rams.
I think so too.
All right. Go Bears.
Go Bears. Go Hoosiers. Let's go. It's going to be a fun weekend. Enjoy, everybody. Stay warm, and we'll see you on the other side. Take care. Good luck out there.
Bye, everyone.